We have the latest read of the UK economy crossing a second quarter GDP. These are the preliminary figures. Plus 0.6% on quarter. This is what was expected. Now, it is slightly higher than the 0.3% notched up in the first quarter. So we are seeing an economy that is expanding. In terms of the year-on-year read, this is now 1.4%, also in line with expectations. It was helped by an extra working day. In terms of what this means, the UK GDP has been now the strongest year-on-year growth rate since the first quarter of 2011. It's been driven by services, construction, production also expanding as well. In terms of the reaction on the markets, you can see sterling dollar is tracking firmer, up about 0.1%. It did fall initially in line after those numbers first crossed. The sterling has been tracking just a little bit firmer, but you can see on the day it's still holding on to some gains. 153.32 is what we're looking at. Let's get some instant reaction. We've got Samuel Toome, UK economist at Capital Economics, and also Helia Ebrahimi, who is our UK business editor, joins us around the set. Yannick staying with us as well. Samuel, come in. What do you think of the numbers?
Well, they're broadly in line with what the consensus and indeed we were expecting at Capital Economics. I think, though, that the economy is going to struggle to gain much more momentum from here. I think there's still some fundamental constraints out there. I think household debt levels are still too high. I think businesses are still very reluctant to invest, and I think banks are reluctant to lend. So I think we're going to struggle to see stronger growth from here on in.
Samuel, why so negative? These are the best numbers we've had in a long time. Isn't there any positives in here?
Yes, I think there are. I mean, it is good to see that this is now the second consecutive quarter of expansion. That's the first time that that's happened in 2 years. So there clearly are signs that the optimism that we've seen in financial markets over the last 6 months or so is starting to feed through to the real economy. But I still think that there are still some fundamental constraints out there that will keep growth subdued for the next year or so.
I mean, I think Samuel's right in that sometimes the GDP figures, especially the preliminary ones that seem to be revised again and again, don't capture what life is like for citizens in the UK. And as you said, the real economy, incomes are still being squeezed, household debt is still high, median incomes have actually dropped in the last 2 years. So living standards will be hit again because of tax benefits being taken away. But yes, it's great for the UK economy, as expected, 0.6% up. We've also got figures from the British Retail Consortium saying that retail employment is up 3.7%. So yeah, we've had great economic data in the last couple of weeks and a royal baby. So news is good. It's just important to keep in context how much of that we see in the real economy.
The feel-good factor is certainly out there on the streets around the UK, isn't it?
I mean, I think, most of European countries will be extremely happy to have this kind of set of results. I mean, if you look at the numbers we see from the Eurozone, I mean, it's a beginning. I mean, it's not a done deal, and it's not the recovery is not strong enough to benefit to everyone. But it is a start of a recovery, and we should enjoy it because I hope it's going to last. But we have to enjoy it at least when we can see it.
The numbers there is that we don't get any more stimulus. So where does this leave Mark Carney in his forward guidance in August?
Well, I don't think it's going to change what the MPC does next month. I think Mark Carney is pretty committed to putting out some more formal forward guidance than we saw last month. But it might make some of the other MPC members, the more hawkish members, slightly more reluctant to go even further, say with more asset purchases. I think probably forward guidance is probably the most we're going to see next month.
Quick one on that, Helia?
Yeah, I think he's right. Forward guidance is going to be as billed, but I think we've seen some rowing back from QE, even from Carney's people. So that will be in line.
Let's just dive into some earnings while you're here too, Helia, because Unilever has reported second quarter underlying sales growth of 5%. This fell just shy of forecasts. So you've been speaking to the CEO of the company.
Yeah, I met up with Paul Polman earlier today.